Welcome to This Explainer. Okay, today we are totally ignoring the scammy, get-rich-quick tropes you see all over the internet and focusing purely on the actual math and data behind building a sustainable 2026 wealth system. We're zeroing in on digital assets, automated dividends, and REITs, basically passive income streams that legitimately work while you sleep. I am so excited to dive into this with you because once you actually understand the mechanics of money, it literally changes how you view your everyday grind.
All right, let's just jump right into our agenda. We've got a great structured masterclass today covering 6 main areas. 1. The passive income reality. 2. Assets versus liabilities. 3. Automated dividends and indexing. 4. Real estate and REITs. 5. Digital assets and innovation. And finally, 6. The discipline of wealth.
Starting off with Section 1, the passive income reality, and escaping that get-rich-quick fantasy. Let's dismantle the overnight wealth illusion right now. So I want you to ask yourself a pretty terrifying question. If you literally stopped working today, if your salary just vanished overnight, where would your money come from? For a vast majority of us, the really harsh reality is nowhere. Without a job, there's absolutely zero money flowing in. The entire financial plan just depends on continuously trading time for money.
Which brings us to Section 2. Assets versus liabilities, and the fundamental difference between the two.
You know, Robert Kiyosaki really hit the nail on the head with this concept. The math is simple but absolutely crucial. An asset puts money in your pocket whether you work or not. A liability, well, that just takes money straight out of your pocket every single month. The truly wealthy focus all their energy on buying real assets. The poor mostly just have expenses. But the middle class? They tend to buy liabilities. Think expensive cars, boats, massive houses with huge mortgages, and they falsely believe they're actually buying assets. And when you look at the financial blueprint of the wealthy, it's like a perfectly designed machine. The money flows straight from the asset column directly up into their income. That's the whole playbook right there. They use their earned income to buy assets, and then those assets turn around and generate their own continuous stream of cash flow. It's an endless cycle of wealth generation that absolutely does not require their physical labor. Okay, let's move on to Section 3, automated dividends and indexing, or what we call the Boglehead maths. Get this, when it comes to the stock market, you might think you need some expensive financial advisor or a genius stock picker, right? Well, over a 20-year period, a staggering 90%, actually over 90%, of actively managed mutual funds mathematically underperform the basic market index. Think about that for a second. People are paying incredibly high fees to experts who literally lose to the market average over the long term. And this is exactly why the Boglehead philosophy is such a game changer. Named after Vanguard's founder, Jack Bogle, this strategy completely flips the script. It uses ultra-low fees, it mathematically outperforms active management over the decades, and it requires basically zero daily effort from you. You literally just set up automated contributions, reinvest those dividends, and let compound interest do the heavy lifting while you sleep.
Section 4. Real estate and REITs. This is how you get serious cash flow without the hassle.
Look, the biggest complaint I always hear about real estate is, I really don't want to fix a broken toilet at 2 a.m. And hey, completely fair. If you want real estate income but want to be totally hands-off, a REIT, or real estate investment trust, is basically your best friend. It lets you own a slice of income-generating commercial properties or apartment buildings completely passively. It trades just like a stock, it pays out dividends from the rental income, and you literally never have to deal with a single tenant. Now, for those of you who actually don't mind being more hands-on, direct real estate is packed with staggering advantages. The tax code is basically begging you to invest. Using something like a 1031 exchange, you can sell a property at a profit and roll all of that money into an even bigger property while deferring the capital gains taxes entirely. You're effectively endlessly upgrading your assets totally tax-free, all while your tenant's rent pays down your debt. It's wild. All right, Section 5, digital assets and innovation. Let's look at how all this fits into the 2026 landscape. The whole definition of what an asset even is rapidly expanding. Major traditional financial trackers like Forbes now have entirely dedicated sections for digital assets, Web3, and crypto portfolios. These aren't just fringe internet ideas anymore, guys. They are totally mainstream innovation categories. For anyone building a modern portfolio right now, understanding digital assets is becoming absolutely essential to accelerating that path to financial independence.
But here's the catch with all this innovation. Because digital markets move insanely fast, your absolute best defense, and honestly your most valuable asset, is actually your own trained mind. Just like Kiyosaki says, an untrained mind can create poverty, but a well-trained mind can create massive wealth. Your own financial literacy is the key to making sure you don't lose your shirt in these more volatile, high-speed spaces. Which leads us perfectly into Section 6, the discipline of wealth. Because honestly, the math is the easy part. It's the behavioral element that trips people up.
We can actually cherry pick the absolute best financial advice out there depending on where you are in your personal journey. If you're struggling with discipline and swimming in consumer debt, Dave Ramsey's strict budgeting gives you those critical behavioral guardrails. Then, once you're out of debt, the Boglehead automated index funds give you that data-driven consistency to really grow the nest egg. And finally, for sophisticated wealth building, Kiyosaki's focus on asset leverage is what truly accelerates your financial independence.
So the big takeaway here, true investors don't just hide from risk by keeping everything in a low-yield savings account that literally loses money to inflation. They educate themselves. They study the market, they learn the tax codes. When you actually do the work to train your mind, deploying your capital becomes a calculated mathematical system. It's not gambling if you actually know what you're doing. At the end of the day, your single overarching mission as an investor boils down to this. You have to take the active income you hustle for at your day job and relentlessly convert it into passive portfolio income. That means buying the index funds, buying the REITs, building the digital assets. Every single dollar you put into an asset becomes a tiny little employee working for you 24 hours a day.
So I'm going to leave you with one final, pretty provocative thought to chew on today. Your income is obviously working hard for you right now, but are your assets actually ready to work for you tomorrow? Seriously, take a hard look at your balance sheet this week and see where your money is really flowing. Thank you so much for joining this explainer. Keep learning, keep acquiring those assets, and I'll see you next time.